broken below that 26,000 mark on the Nifty. Bank Nifty too is below that 59,200 mark. So clearly we are seeing weakness across the board. Nifty mid and small cap index should also come up for you on your screens. That too continue to remain under pressure. Shriram Finance, Max Health and Tata Consumer, these are the top 3 losers from the Nifty 50 index, all of them declining anywhere between 2 to 2.5% in trade today. In terms of other broader market gainers, we have Root Mobile. That one is gaining nearly 10% in trade. The biggest gainer on the Nifty 500 index. Spark and Solara Active are also some of the other gainers from the broader markets. On the losing side though, PSU banking stocks continue to remain under pressure. Indian Bank is down 6%. Thyrocare and Angel One, after reporting weak set of operational data for the month gone by, that continues to remain under pressure, down nearly 5% as we speak. PSU banking stocks, as I mentioned, are also under pressure. Indian Bank, Punjab National Bank, Bank of India, all of these stocks continue to reel under pressure. In terms of other newsmakers, we have DOMS on the back of a positive brokerage report that has come in. This stock, it has given up most of its morning gains. Remember, at one point in time, the stock was up 6%, but despite that, it is still up 2.5% as we speak. Angel One on the back of its operational data is under pressure, and we have Chalet Hotel on the back of a Jefferies report that too is gaining nearly 2% in trade today. So yes, on the index level, we are trying to sustain that 29,500 mark, but we have clearly broken below that 26,000 mark for now.
Okay, that is what the market structure is like right now, and the major reason why, one of the major reasons why we're seeing so much weakness in the market right now is this fall that we've seen in the rupee today. And remember, this has been the third consecutive fall coming in for the rupee. Now, the rupee has slid past the crucial 90 per dollar mark, hitting a fresh new record low for the third straight day. Persistent portfolio outflows, weak trade data and uncertainty over the delayed US trade deal are keeping the currency under pressure. Anurag Joshi is joining us to tell us more. Anurag.
The Indian rupee has passed the $90 mark. The Indian rupee touched an all-time low, a fresh all-time low of 90.28 per US dollar, and the rupee has eased more than 0.4% versus yesterday's close. Now there has been sporadic sale of dollars by certain public sector banks, and this has been on behalf of the Reserve Bank of India. And RBI intervention has also was seen in the morning at 90.15%, and it is very sporadic during the day. So what are the reasons? It is uncertainty of the India-US trade deal, and that's been a major dampener for the Indian currency. And also through the year, if you look at the YTD number for the FII outflows, that's over $16 billion. That's the most in Asia for any economy. The rupee is also the worst performer in Asia so far in 2025, declining more than 5%.
Thanks so much for joining us with all those details. So that's as far as the rupee performance is concerned against the dollar, and that continues to weaken. But shifting focus then, and the beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. And the objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of this campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure that your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
Okay, on that note, viewers, time to slip into a very short break. When we return on the other side, we'll take you through the fundamentals in the market and get you a better understanding on that. So stay tuned. We'll be right back.